following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Friday night here in the Philippines and Friday morning there in East Coast of the United States. And had Eric on yesterday. It was just an awesome show. Thanks, Eric, again for coming on. And I was looking at some of the news on BlackBerry, and it made me think of Eric again. BlackBerry looks like they're going to hit the bid here and put their first version on Android, basically saying that they're. And here's a, excuse me, here's a loyal customer. Got a BlackBerry Z10 right here. They're kind of seemingly starting to give up. They've got less than 1% of the market share on these type of devices. And I sent Eric one, bought it on Amazon for a pretty good price. I think these things came out for $699 US dollars. And I got it for like $199 brand new in the box, unlocked. Could go to any country in the world, just plug SIM card, dual SIM cards actually. And I was with Eric in New York, and this was after the fact. And I said, Eric, this is kind of a testament of, I guess, where BlackBerry's at right now. And again, I'm still a BlackBerry guy, but Eric wasn't a BlackBerry guy forever, and this is kind of case in point of where a lot of folks are, I guess, these days. I said, Eric, hey guys, nice to see you. And where's your handheld smartphone device, BlackBerry, that I sent you? He goes, I left it at home. So I guess it's better to just walk around with no phone than to have a BlackBerry for some folks now. It was kind of funny at the time. We had a good laugh about it. But he's had a lot of problems with that phone, and I have too. And I've tried to hang in there, but I guess a lot of folks are just coming and going with that thing now. I tell you what, let's take a look at the U.S. dollar. We've got a PPI that's coming out at 8:30, so that's obviously going to move the dollar, the bonds, the notes, more than likely the U.S. stock market. Any confirmations that inflation is starting to get to normalcy type situations is going to possibly cave in the notes and the bonds, and that may make some folks seemingly happy in the U.S. stock market. But if the bonds and notes cave in too much, then we may have a little bit of an issue there. So it's a little bit of a delicate situation. We're going to have to pay attention to it when it comes out. Here's the U.S. dollar. We talked about, excuse me, this is our daily view. Hold on 2 seconds. Let me get back to our weekly. The profiles on our weekly, here we go. This is the June contract still. 93.86, 87. We talked about that was kind of the latest support area in the U.S. dollar, and I'm still not a big fan of of selling the U.S. dollar, looking for reasons to buy the U.S. dollar. We're below profiles on the daily. I'd like to see this thing get back above 96.38 now to start really looking at this as a serious buy again. And if we can get back above 97.88, I think it's full on again on the U.S. dollar. But that being said, let's take a look at this. We're going to run down some currencies right now really quick. First, I think that's kind of important. A lot of these are going to react after that PPI, I think. Not as much as a jobs report, but here's the euro currency. And by the way, it's Independence Day here in the Philippines, so it's dark, it's quiet here at night. There's no one working. We've got a chance to focus here, and the building has the air conditioner off, which is really, really nice. Here we go. Here's the euro situation. We talked about having to get back down below 112.25 to start looking at this from the short side again. I'm a little bit more biased on the U.S. dollar going north here and the euro going south, obviously. I did a pretty big Bloomberg brief on this. Not big, but it was brief. 112 112.25. But remember, this report coming out, we're probably going to have some volatility, so you might want to just sit tight on that. But that's going to be the major inflection point for me to keep in mind. 112.25 on the euro. Now, if you look at the 240s on the euro, we're starting to have some breakdowns. But again, not rolling the dice before that report comes out might be a good idea. Let's take a look at the yen really quick. And this is something, again, showing its hand a little early relative to the dollar. Talked about this 123.29 area. This is our daily situation. And as we look at this 123.29 on the yen, I'm a big fan now that we had that reversal daily close above, go back and retest. If you guys can see that, this is one of the more powerful situations you can have. And I think, in my opinion, that the yen kind of showing its hand early might not be a big gamble here. Stops below 123.29 on the yen, and I think we can easily get back into 124.61 and even higher on this. Again, we had a kind of like key reversal off the recent all-time highs, and that was not the greatest thing in the world. But if you step back and look at this and go into the weekly, I mean, there's not a lot of technical damage going on here when you look at the long-term situation. And I'm still looking to buy support and buy breakouts on the Japanese yen, the devaluation of the Japanese yen. And I think there are reports coming out over here, month after month, are just going to show the languishing effects of their economy in general. Let's take a look at the Australian dollar just to hit the currencies real quick. This is something we've been pretty bearish on the long term. Obviously, it's kind of retesting some lows down here around 76 on that weekly unfair low. Let's move into the 240s, getting a little bit of a breakdown here, very similar to the euro currency we just looked at on the 240s. Bottom of the box 77.09. Again, that's going to be a little bit of an inflection point to pay attention to. Stops above on that particular currency. I'm a big fan of not going long that currency. Let's take a look at the ruble. This is something that started breaking stride recently, and ruble US dollar. Here's the situation. Started having a little technical damage, get back in the ballgame on the long side here. Stops below 54.84, 85. And you might say, well, we just broke below there. That's what stops are for. And when we started looking at these breakouts on the ruble, my weeklies aren't coming up here on the ruble. Sorry about that, guys. Oh, here we go. Can we populate? I hope so. Should have our boxes come up anytime. Here we go, please. Here we go. Okay, so that breakout around the 53.12 area, we talked about that when it happened. We talked about the big buy point. We've reached a low here, 53.26, 53.12, 53.13 was the low. So we kind of retested that. I'm looking at this to go north. That's the devaluation of the ruble. As Eddie had spoken, coming back from Moscow last week or the week before, I think it was last week, he kind of, boots on the ground situation, just kind of observing, looking around, asking questions. That interest rate environment is ultimately going to just cause the squeeze here. And I think you may have a decent play here, but stops below 53.12 on the long term on the ruble will probably be in order for that particular trade. But remember, we've had a close above, go back and retest. I think we might have some clear sailing up north here. Now you've got some confirmations again on the dailies getting back above these profiles, and that's a good thing. We're going to leave off the S&Ps. We're going to get into that just a little bit after the first break. We're going to get prepared for that PPI. We're going to hit gold. I mean, again, I'm just not a big fan of trading gold right now. I don't think you got a lot of direction. There's some guys out there who are really talking about the 1150 area, and everybody seems to be bearish on gold here. It's not really something that's in play. That's kind of when you start having those squeeze plays up north. But right now, I just don't see any reasons to really trade gold right now. So silver, very similar situation. We're going to go into November beans again. We talked about this one. We talked about not getting too excited on any type of breakouts that happen on this, passing on them. That was more of a stop out on the 913 area. Now we got below 913 area. These are November beans. We retested that 8.99 today already. Low of $9.50, 900. 0.5, whatever you want to look at it, which is within a penny a bushel of targets down below on these daily profiles. We talked a lot about this from a fundamental standpoint and a technical standpoint, and I'm waiting for my weeklies to pop up here. Here we go. Finally. This is something that we feel is going to be in the 850 range, maybe even 825 ultimately. But again, that's what stops are for. We kind of, leverage off the 940 and a half, 942 area. The next leverage point down was 913. We hit some initial targets again, 8.99, $9 a bushel. That's a big number to break the barrier and stay below. But I think it's a foregone conclusion, and being bearish on beans is not a bad thing in my book. But again, can't say it enough. Make sure you put your stops in, guys. All right, we got to hit oil really quick. Got about 2 minutes left. This is something, we had kind of gotten above profiles on the daily. I'll pull this up here. We've got some automated systems that passed on these longs, and it passed on these longs based on a number of factors. On the breakout here, it usually just kind of by default does a lot of these things. If the opportunities are ripe, passed on that. Thank God we're getting back down below those 60-50 unfair highs on the July contract. And we could just drift around here. Talked about, the bias is probably towards the north side on crude oil. But again, the dollar, PPI coming out, the dollar could strengthen, based on a pretty good PPI. And that would, not really bode well for oil and any commodity, including soybeans and crude oil here. So let's take a look at the September contract of the 10-year. Now, the major inflection points to pay attention to on the intermediate, 124.23 down below, 125.24 up top. So you got about a full handle range there on a new profile that's appeared today on the 10-year. So those are the numbers you can focus on, hopefully, and just kind of wait for the action to happen and then trade the reaction. We always talk about that, and I think that's probably in order this morning. All right. Okay, so we've covered most. I can I can throw the Shanghai in there, but it's kind of like, oh, the Shanghai's up again. It's making all-time highs again. Hey. Big deal. Amazing. Talked about not time to short this thing, and it's still not time to short this thing. Get some confirmations, and let's look at these 240s and look for some form of breakdowns. I mean, the next time you probably get a chance to really feel decent about shorting this thing was below 48.97. Let's just call it 4,900. And as we look at the breadth across the board on the Shanghai, it's just screaming long. We'll be right back, guys.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way today. To experience TFNN programming, see high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got a PPI coming out in about 5 minutes here. You have to pay attention to that on the notes and dollar and currencies and S&Ps here. S&P is trading 2102 right now as of the time of this show. CEO of Twitter is leaving, and that's being taken as pretty good news here. Just when there's talk that I'm leaving, Taz, it's the same euphoria. In fact, it's Independence Day here in the Philippines, and got an interesting email that ended up being a joke today. It came from Logan can't read charts 263 at yahoo.com, and it was one of the guys here. But the most alarming thing, it was just a joke email, but the most alarming thing when I first got it was there was actually 262 people with the same Yahoo email address before 263. Logan can't read charts, so that was a nice opening to the Friday morning, and that was always nice to know it was a joke. But anyway, Twitter, let's take a look at the weekly situation here. 37.74, that's the weekly on for lows. This company, since it IPO'd, really has just not, been, it's been cut in half since they came out. It was pumped up like crazy. Obviously, there's a lot of competition to this type of scenario now. I think my idea on this personally is that it's just going to keep trailing down. You got 37.74. Combined with this 36.28, we're trading 36.86 pre-market, 36.85 now. Had a little blip. The CEO's leaving. You know, that's just kind of a covering thing. I think you've got a. I think you've got a chance to really step on the gas pedal with this now. 37.74, 36.28. That DMZ stops above there, and the cool thing is you got a new weekly profile here this week, and we're trading. Remember, that profile is above price action, and that is bearish in itself. And if the market gives us any help whatsoever, this thing has not been cooperating whatsoever with the market. And I do not have our scanner up right now. I'm going to start it. That's one thing. One thing that I think we've gotten ironed out completely now. I just got the phone with Steve in Chicago, who's running this with coordinating with Tommy. And I think you guys will be able to grab demos of this, I hope, Monday. And people don't believe me anymore. That's okay. I've been talking about this for a while, but I'm pretty sure it's going to happen Monday now. It's a really cool product, the one, in my opinion, the one I've been showing you. So that's the situation on Twitter. Let's take a look at a couple other stocks we want to look at here. Dish Networks. Again, a little bit of a situation on Dish Networks here. A little bit of news is out on it. And whatever that news is, we're looking at pre-market 73.95. Here's the situation, 73.95. You're right in the middle of a fair auctions. I had some emails about this early, and they're like, what do I do? Is it time to get into Dish Networks? I don't think so. I mean, it's something you don't have a lot of leverage here, especially in the long term or intermediate term. This is our long-term weekly on Dish Networks. You come down, you kind of retest the unfair high 71.50. If you got I'm not a big fan of going long stocks right now. I know the market's just kind of done a short squeeze here. And we're looking towards some reports and looking for confirmations. But I think with everything that's happened in the U.S. economy, numbers-wise, and rates doing what they're doing, I mean, the market should have been a lot higher based on all of that, and it's not. And I'm not a big fan of buying stocks right now. So again, if you're going to buy Dish, 71.50 stops below on something like that. Let's go into the 10-year again. And let's actually look at the 30-year, also the September contract. Remember the inflection points, if you didn't catch the first part of the show, 125.24 up top, 124.23 down below. That's kind of where you're probably going to have to wait and pounce. Don't think, the PPI in general is going to really drag this thing one way or the other, but you got some kind of day trading inflection points there. And any breaks and closes above 125.24 are going to have to seriously be paid attention to on the 10-year. Let's go into the 30-year really quick. Let's talk about this one. Okay, so the inflection points pay attention to on the 30-year. You got three here, basically. You got a very strong one at 150.130. That's a POC and a current unfair high. You got another inflection point. These are all provided in the scanner. 150.24 and way down below 148.04. Guys, we'll be right back after the break. We'll talk about the action. Hang around.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were just kind of waiting for the PPI. It's just really nothing doing here. Nobody cares, as Jay had said here in the den. So, I guess we got through that. Let's take a look at the S&Ps here. Kind of waited on this one. Again, got a little bit of technical damage. I'm not a big fan of going long these S&Ps, and now you got some inflection points to pay attention to. I think that's somebody taking a picture of me here at above 2104. Okay, so that's the somewhat breakdown possibly on the S&Ps here, an inflection point to pay attention to. It's kind of nice that we rallied above there and now come back down below. And as we look at the dailies, I'm going to go back to our scanner for a second here. I'm going to go back to the indices. And as we look at the S&Ps, we got breadth positive, but, this is not exciting. We talked about passing, unfortunately, around that 2068, 2069 area on the longs. You can't catch everything. And as we had gotten back down into that area from above, the leverage, in my opinion, with the weeklies and dailies being negative on the breadth situation, in my opinion, wasn't in our favor. So that's why we kind of passed on that. But as we look at stocks open today, we're more than likely going to flip over. And I think, and this is our daily situation right in the middle of a fair auction there, I think that these 240s are something you could probably focus on, namely 2104 when it comes to the S&Ps right now. Let's go back into the scanner. Let's drill down into the S&Ps here. Let's do a little bit of a sort below the box. Let's just find out what is not cooperating with that particular rally up. Let's show only matching results. And let's just kind of look at the dogs of the S&P here when it comes to profiles and see what's still on the radar screen. And wow, amazing. Walmart's still there. Yahoo's got some news out here. Let's just take a look at Walmart. And we're trying to find things on a relative strength, relative weakness scale, I should say, to try to trade against these S&Ps. Now, Walmart's really interesting. I was looking at this earlier. We're trading 73 pre-market, but the cool thing is on Walmart, we've been looking at this caving in since the 80 area. We talked about selling these 80s. Now we're down almost into the 70 area. But as we see this yesterday, this profile appearing above price action, as you know, you watch this show enough, and you love the action yesterday on Walmart. Profile appearing above price action is always a really good sign if you're wanting to short that particular instrument. So it's kind of held true here. We got the profile appearing above price action. That's a really good, clear signal. But the other cool thing is that above 74.05, you can orient stops above that area on the short side. And if you get any type of market help being a pullback in the S&Ps in general, I think Walmart could start coming apart again. And again, you know, this stock to me is not on sale. It doesn't have to bounce back anytime soon. It may be going into a whole new paradigm. And you always got to kind of keep that in mind. And remember, dollar cost averaging is doubling down on losers. That's what that is. You always just put it in perspective. Let's take a look at Yahoo on the radar screen here. My weekly charts for some reason are having a little bit of delay, so we're going to pick that up in just a second on Yahoo. Let's go into our dailies. This is the situation. I think you got the same situation, 41.23 stops above. You got a stock that's not showing that it wants to cooperate with any type of market moves up top on the S&Ps. And as you look at Yahoo, that's the big number, 41.23 now on that particular instrument. Let's take a look at some other things in the scanner here. I'm just picking out the ones that are looking a little more than attractive. Ross Stores, ROST. And again, we're looking for weak stocks in a market that's rallied, senselessly rallied, in my opinion. As we look at, let's see here. Did I type that in right? Here we go. Hold on. Let me pull our scanner back up here. Let's see. I think I'm having a problem with the E-signal on this stock right now. Let me go to another one here. And let's pull up Micron Technology MU. Here we go. Again, my weekly charts are having a little problem. The Micron Technologies obviously has kind of been not the darling of the tech chip world here. 2502, nothing to hang on to down here. Scanner's kind of picking this out. Remember, profiles appearing above price action. That's really, really bearish on any time frame. And I think we could drift a little lower on this. I think we've got to get some help from the S&Ps. And the S&Ps may churn around a little bit here. Here's the situation again on the S&Ps, just to kind of put it bluntly. 2120.75 up top, 2073.74 down below. Not a lot to hang on to here. You got a pretty wide profile with the POC right at 2100. So 2100 is going to be a little bit of a rock run. This is kind of falling off the side of the hill on the upside above 2100 and falling off the side of the hill on the downside around 2100 on that POC. So that POC, especially on a new profile, is going to mean quite a bit. especially on a wide profile. Let me just kind of see what's going on here. Here we go. All right. We're going to take a look at Merck. This is one we looked at the other day, MRK, when Eric was on the show. We're going to take a look at Coca-Cola. So let's take a look at Merck really quick. Excuse me. All right, so again, leverage points on Merck 59.14. I'm going to pull up our, let's see here. And you've got some initial targets down below. I'm just looking at the scanner, looking at the bottom of the box on the weekly, 56.38. So you might have a little bit of a trading opportunity, leveraging stops above 59.14 and targets placed. Since I can't pull up my weekly charts, I've got them here on the scanner. Targets initially down below 56.38. So you might have a little bit of a, 6, 7, 8% possibility with stops above 59.14 on Merck. I love the way this is looking. I love stocks that are kind of making these triple, double, quadruple bottoms and not wanting to really get away from those bottoms at the very end. So when you get these bounces kind of off these profiles, you don't want to see these things congregating and compressing down back into these profiles or hanging around them. If we get any market help, we might have a good little move in Merck there. So let's pay attention to that one. Let's see. Let's just go back up the list here. And we're looking at, we just did a little sort here below the box. And we're going to just kind of resort this here real quick. Family Dollar Stores, FDO. Now, this is one that's interesting. The scanner is basically saying Family Dollar Stores, FDO. You got to peel back on the weekly here, which is basically saying that we're going to have a new profile attempting to appear, but it's in a gray area. FDO. Let's just try to explain this. We're not getting our weekly, excuse me, our weekly charts on this one right now, so I don't know how to retrieve that right now. But again, on Family Dollar, you're below profiles. You've been below profiles. Stops above 78.94 on this one, and again, some market help would be just awesome to have on Family Dollar. That one's probably not the ripest opportunity. Let's look at H&R Block. This is really interesting. H&R Block, HRB. HRB. Okay. I'm going to try to create a new weekly chart here. This is kind of disturbing. I'll tell you what, I'll do it on the break. I apologize for that, guys. HRB, kind of the horses out of the barn on this one a little bit. As of yesterday, had a pretty decent pullback. Let me pull up our scanner here and get some numbers off the... Okay. That's the cool thing about the scanner. I don't need the charts. 31.47, bottom of the box on our weekly. 33.13, here's the landscape view. Here's the level of the market. All right, so you got some new opportunities, breakdowns below 30.35 now on H&R Block. Let's take a look at Home Depot. Seemingly sitting right on the cliff here on our dailies. Again, we're looking for weak stocks relative to profiles in case we have a little bit of a market relaxing moment here, I hope. So Home Depot, you've kind of broken down and gone back and retested yesterday 111.40. All right. So Home Depot 111.40 pre-market, we're trading looks like 111.10. So let's pull up the scanner, keeping in mind 111.40. Let's go down to Home Depot. And here's the situation here. Now, as you can see, we kind of broke below profiles on the daily. We're coming back and retesting. You may have some shorting opportunities down to 103. So you might have a little bit of a pullback here if we get some market help on Home Depot. Coca-Cola, we want to take a look at this one because we're at the bottom of our weekly profile. Just going to pull up our landscape view. See that? That's That's interesting. Let me pull up Coca-Cola here. And again, we don't have our weekly charts, but this is really, really cool because as I go into Coca-Cola, I'm going to see what our bottom is, 40.02, 40.16, bottom of the box on the. So we're sitting here basically on the cliff on Coca-Cola. All right. This is extremely attractive to me because we have a new profile. It's relatively thin relative to the previous profile. We're trading below that profile. It's the first time we've had a print and a new profile yesterday. And this is a stock, to me, that looks extremely ripe for a short, just based on the things I have just talked about. We've also got some really cool help here with Navigator crossing below zero at the same time. No new magenta, purple bars down below, nothing like that. So it looks like we, it's a little bit of a market help situation. Stops above 40.16 on Coca-Cola on the short side. Let's take a look at the DAX really quick. This is something, I wanted to talk about it yesterday, and I'm going to go into our scanner because, again, we're missing our weekly charts. I'm going to go into the DAX. Where are we at? DAX. I know it's on here. There it is. Okay, cool. All right, so here we go. Bottom of the box, 11,430. We pretty much hit that yesterday, or excuse me, this past week. And now we're looking at inflection points on the daily. So remember that number on the DAX, 11,430. All right, so this is our daily situation. Yesterday's high was 11,454. So again, we came right into that weekly unfair low and we're backing off. In my opinion, on the long term, you can put stops above this DMZ 11,430 into 11,518 on this particular index. And I'm liking this from a short side again on the DAX. Let's go back to the dollar really quick, especially after this PPI. Kind of uneventful. Dollar's got to start humping it, getting above 95.34 on an intraday basis to start looking a little more attractive here. But remember, getting back above 96.38 on a closing basis on our daily is going to make me feel a lot better about going long the dollar. We're having some issues with our charts today. Sorry, guys. This is the yen trade. This is, again, my favorite trade on the books. It's been the favorite trade on the books since 101 territory. And we're trading about 124 right now. So, again, stops below 123.29, going back and looking at some of these currencies after that economic report out of the States. All right, guys, got about 10 seconds here. When we come back from break, we're going to take a look at a couple more stocks on the radar screen that I've got written down before we close the show today. We will be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes here. And here's the scanner, just kind of looking through the daily situation. It's still not impressing me whatsoever on the global scene and what the indices are doing in general. I want to go back into the euro currency here, if I get it to pop up. Here we go. We talked pretty religiously about this 112.25 area. That's going to be the kind of the rocker arm for the euro, in my opinion. I'm a fan of this going down, so I'm just going to try to keep turning the rents the same way, getting stopped out if I have to around that level, and still hope for targets down below 108.70. That's the situation there. We talked about the Australian dollar a little bit. We talked about the Japanese yen. We talked about the ruble. If you've got a way to trade this, RUB USD, I'm kind of becoming more and more of a fan of this thing getting devalued again. And why? Because we kind of had a nice little retest, breakout and retest of those weeklies. You don't get these that often, and when they happen, that is going to be something that, you know, you have to pay attention to. 53, 128, rounded off. I'm going to be able to play stops down below there. And with Eddie giving us some fundamental news coming out of Moscow, boots on the ground situation. I'm a big fan of that particular currency get devalued even farther, as previously we had reached highs in a kind of a sick, insane manner up in the, I think we reached a high of, was it 81? Yeah, there it is. That was wild when they declared the, what was it, 70% interest, 14%, I forgot what it was. So again, starting to show some technical signs here. He's got a way to trade it. It might be something to pay attention to next month or two, or next year or two, you never know. We're going to take a look at the Nikkei really quick. Again, this is something very similar patterns to the yen, the devaluation of the yen, the strength of the Nikkei repricing itself. Again, came off that 20,000 area again. And again, targets up top, 2685 and even higher in my opinion, but you got to put your stops below 20,000, let's call it, on the yen trade. A lot of guys starting to trade that product. When you got government intervention and devaluation of the currency where the government's behind it, you got to take a hard look at some of those products. You might get a chance to get a free lunch, as they say it. There is no free lunch. I think there's a free lunch here. There's been a free lunch here since the yen was 101. All right, let's take a look at FOXA. You know, here's some, excuse me. Here's something I'm seriously paying attention to. 33.21. I love the way this stock is acting on the short side. It's on the scanner. This is our weekly view. I think we've got much more downside on 20th Century Fox A shares. Here we got 33.21 stops above. With any type of market help, I think you can easily get a flush down to 30. That's the way I'm looking at Fox A shares. All right, we got about 20 seconds left here, guys. I'm going to go back to the notes really quick, the 10-year, just to kind of give a little last 10-second dissertation on this. Inflection points to pay attention to 125.23 down below 124.23, and short-term inflection points 125.06. Guys, you've been great. Stay tuned for all the posts on the TFNN Network. We'll be back again Monday. Have a good weekend.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.